Hi, it's John Kelly. In this module, we're going to talk about sampling. And as always, we want to be efficient and effective, follow professional standards, and document the work we've done in accordance with those standards. Sampling in section 530, there are four major sections. It discusses sample design, size, and selection, doing the procedures, projecting the misstatements, and evaluating the sample. First thing we should remember is often when we are auditing, we are not sampling. Sampling works when we have a large homogeneous population, and many audit populations are not. If, for instance, we say in our audit program, look at all additions more than $50,000, we're not sampling. We've concluded that there could be no material misstatement in items not examined, and we're looking at everything above that. So we're not sampling. So when we consider the role for sampling, first I guess we think of risk of material misstatement. If risk of material misstatement is negligible, our probable audit approach is we're only going to be doing a very simple analytical procedure, and therefore it's unlikely that we're going to be doing sampling. If risk of material misstatement is low, our probable audit strategy approach is to do analytical procedures, a systems walkthrough, and then some very limited tests. So again, sampling is unlikely. And risk of material misstatement being low or negligible is going to be the case for many audit assertions. So right off the top, we're probably not going to be doing a lot of sampling. But if we had an assertion that was moderate or high or significant risk of material misstatement, and if it was in a large homogeneous population, and again, maybe that's not going to be the case. Valuation, for instance, is not a large homogeneous population, valuation of accounts receivable. So sampling, it sounds nice. It would be great if we could use sampling for every audit assertion. It's lovely and statistical, and we can do math, but probably not. Second thing we need to think about is the kind of audit population. So for instance, cash. Is it a large homogeneous population? Well, no. It's one or two bank accounts, so we're probably not going to be sampling. Accounts receivable, possibly. And so if we've decided to send confirmations, which of course you know I don't like, we might do that. Inventory. And inventory is probably the place we're most likely to do sampling. Inventory is probably a large homogeneous population, and we're going to need to draw a conclusion, particularly about existence. We're going to want to figure out how many items we should count, and so sampling might be very useful there. Fixed assets, no, it's not a large homogeneous population. We have the existing fixed assets at the end of last year and additions, so probably no sampling. Accounts payable might be large and homogeneous, but we're looking probably mostly for unrecorded payables, so sampling from the existing population isn't going to help us with that, so probably not. Long-term debt, probably 1, 2, 3, or 4 items, not a large homogeneous population. We're probably not sampling. So suddenly the number of places we can use sampling in our audit is declining very quickly. Revenues and expenses are large and homogeneous, but if risk is low and we're going to do sampling and a walkthrough, then no, we don't need to sample. Depreciation is a single number, probably going to be tested by a substantive analytical procedure, so no. Interest on long-term debt, again, is on 1 or 2 or 3 instruments. So we're, again, probably going to do a substantive analytical procedure, so we're not sampling. Now, if we were sampling, professional standards give us guidance on design, size, and selection, and we need to consider the purpose and population. We need to pick a big enough sample size, and each item needs to have an equal chance of selection. We need to decide what a deviation looks like. and we need to decide whether we're going to be statistical or non-statistical, and both are equally acceptable. Picking a sufficient sample size, and here in very simplified form is the sample size formula. It comes from the CICA extensive audit testing study done in 1980. And it's actually relatively simple to figure out. As the population value gets bigger, our sample size should get bigger. And as performance materiality gets bigger, our sample size should get smaller. So it kind of makes intuitive sense that population value divided by performance materiality gives us our sample size. Now we can probably think there's a couple of adjustments there we need. You know, if we're doing a sample to deal with higher inherent risk, shouldn't it be bigger? And lower inherent risk, or risk of material misstatement, shouldn't it be lower? And the answer, of course, is yes. And secondly, if we expect a lot of uncorrected errors, or there's some uncertainty about that, shouldn't that make perhaps performance materiality smaller? And yes is the answer to both those questions. If you are thinking about how much satisfaction you want, there is a confidence adjustment factor, and it ranges from 0.7 for 50% confidence, or 50% reduction of risk, or assurance rather, to 3 for 95% assurance. And 95%, if you think about it, is really high. And you also need to adjust performance materiality, and let's just say that's a good reason that we want to adjust all errors. So performance materiality is almost the same as materiality, and we can get that as big as possible, and we don't need to adjust it. Now, would we ever want to sample at 95% confidence? And there's several reasons that the answer is no. First of all, it means we're getting all of our satisfaction from a single test. So we are ignoring all the other evidence we get from all the other tests and doing a single test to get all our evidence. Second thing is, if we've got 95% confidence, that deals with risk of material misstatement way above high. We've done probably way more work than we need. And if we're talking about accounts receivable, for instance, confirmation addresses the existence assertion. That's probably low. We don't need 95% confidence. So we're probably never going to be doing that. Now, I will tell you a story. One of my partners came to me one day and said, "John, I've heard all about this. I don't want to sample at 95% confidence anymore, but I'm in a situation and I don't know what to do." And I said, "What's the situation?" And he said, "Well, we've been hired by a client who's buying a business, and they want us to make sure that in the acquisition, the receivables they're getting are good, and I don't know what to do." And I said, "You know what? You're at 95 or 99% confidence. We should be doing extensive sampling, extensive confirmation, extensive testing to subsequent payments. And as long as the client's prepared to pay for that, that's a situation where materiality is very low and risk of material misstatement is very high, and we need to do a lot of work." So sampling for 95% confidence is going to be rare. It ignores the fact that the suggestion is that risk of material misstatement being high is 60%, needs 60% confidence. So 95% is way above what we need. And it would only apply in a specific assertion where risk of material misstatement was very, very high. So when is this used? Picking items for inventory account. We mentioned that. Let's not confirm accounts receivable. Let's not use it for that. So not often. Everything needs an equal chance of selection. Well, we could do random selection. We could do a purely statistical sample, but there is a lot of work and effort to draw a statistical sample, and that may not be efficient. We could do some kind of systematic selection, random start and a constant interval. We want to do 20 items. There are 1,000 items in the population. We divide 1,000 by 20. That gives us our constant interval. We come up with some way of a random start, and away we go through the population. or we could use dollar unit sampling, or we could just use haphazard sampling. We just pick first one on the page, second one on the next page, third one on the page after that, until we've got our 20 items or 10 items. There is another type of sampling which is block selection, and no, we shouldn't use block selection because you cannot draw a conclusion from it because everything doesn't have an equal chance of selection. Perhaps the only time we might use block selection is we might say, well, I'm worried about cutoff, so let me look at the 10 items before and after year end. So that's a block sample, but I'm testing cutoff, so it might be appropriate there. All of these are discussed in Appendix 4 to 530. After that, we're going to perform the procedures, investigate deviations, project misstatements, and evaluate the results. And document. And this is going to be section 230, which will tell us we should document the results, the identifying characteristics of what we looked at, and who did it, and when they did it. So, thanks for listening.